Hello, my name is Barry Gray. I'm Marketing Director at BOIPA Payment Acceptance, which is the marketing alliance between Evo Payments and Bank of Ireland. We recently published the COVID Altered Marketplace report based on research conducted amongst a representative sample of over 1,000 adults nationwide. The research and report looked at changes in card and contactless payments brought about by the pandemic and associated changes in consumer behaviours. Today, I'm delighted to be joined by Brian Cleary, MD at BOIPA Payment Acceptance, and Loretta O'Sullivan, Chief Economist at Bank of Ireland, to talk about some of the key findings in the research and also to look at the current state of the Irish economy and what the forecast looks like heading into 2021. Brian, clearly lots of changes over the last 9 months, but before we get into that, contactless technology has been around for probably the last 8 years. What benefits do you think consumers recognise in contactless payments?
Thank you, Barry. Yeah, it's been a long journey on contactless, and I think that the COVID experience has absolutely transformed the journey to almost complete contactless activity in the Irish market. I think it's specific to your question. The experience for the consumer is really, really positive. Consumers like the contactless transaction. It's very fast. It's a very good service. Consumers can get in and out of a coffee shop much quicker. The same in a retail store from a queuing perspective. It's absolutely very, very safe, and it's very, very secure from a fraud perspective. And it's entirely hassle free. It's something that I do many, many times myself, either with my physical card or with my phone. And they're the kind of the key areas in terms of what consumers recognise in contactless payments. It's just a very, very simple, effortless customer experience.
And tell me, to what extent do you think COVID then has accelerated consumer shifts to contactless payments? And do you think ultimately this change is likely to be permanent?
Well, I think it's permanent already. What I would say is that, credit to all the banks who increased their limits from €30 to €50 when COVID started. That was definitely a sea change in terms of consumer behaviour. And I think the whole hygiene factor with coins and with cash, and people were afraid to handle coins and cash from a COVID perspective. And I think that the payments industry with the banks getting behind the message that contactless is now at €50. And indeed, if you're using your digital wallet on your mobile phone, it was always above €50 anyway. There's no limit there, as we know. So the banks increased it to 50. As I said, Barry, a lot of advertising messaging went in behind that with the payments industry, as I said. And where we are now, if you just look around, I'm in the payments industry, so I'll always have my antenna up, and all I see people doing today is paying with card or paying with their mobile phone or with their watch or whatever, and it's all a contactless experience. And consumer behaviour isn't going to shift back now because we have a vaccine for COVID, and it's going to be, hopefully, measures will reduce in 2021. The shift has happened. It's not going to reverse, and regardless of vaccine or otherwise, people are just used to doing it now, and consumers aren't going to change back. I absolutely don't see that.
And according to the recent research, 54% of consumers either envisage themselves going cashless in the next 5 years, or they already perceive themselves as cashless. Has a cashless society worked in other countries, and is it something you think Ireland is ready for at this point?
Well, it's something that I'm very passionate about, not because I'm an MD of an Irish business that supports payments. Cash is expensive. Printing it, producing it, carrying it, the whole piece. And to your question, I mean, if I look at, Sweden is a good example from a cashless society. It has worked there. They're pretty much a cashless society. The Nordics in general, very much a cashless society, and it's done them no harm. It's only done them good. But we won't be ready yet. We'll only be ready when we have transport cashless and other state services like that, because far too many places in our cities and towns, we've got to go pay for parking with coins. You've got to go, as I say, get onto a bus and hand in €5 maybe, or use a leave card and it's not topped up, and all that type of experience. So we'll only get to the real cashless society when those type of services are offer card acceptance. And the one that I've been, as you know, Barry, I've been very, very passionate about and vocal about is the whole transport area. And it's taken far too long. We have a next generation ticketing tender out there, but we need to move at pace. I often talk about Transport for London and how easy it is to move around London with your debit card or with your digital wallet on your phone, etc. You can fill a double-decker bus in London in, I think it's like 38 seconds using contactless payments technology.
Okay, well, again, from the recent research, almost half of consumers believe that either some or all physical cash should be withdrawn from circulation in the next 10 years. To what extent do you see notes and coins remaining in circulation? And I suppose, what are some of the considerations around the availability of physical money?
Yeah, I think becoming getting rid of notes and getting rid of cash will be. It's now. I think we're in a natural evolution stage following the revolution of COVID on payments. So I've spoken already about we've huge shift towards contactless and all the reasons that happen, and not just contactless, just card acceptance in general. So we've had the revolution of COVID. The national evolution will be consumer behaviour. I just don't want to have coins in my pocket. I don't want to have to go to an ATM to take out €10 to go pay for parking. All the stuff that I've already spoken about. And in terms of the advantages and the disadvantages for me, I often I'm a banker by trade. I worked at Bank of Ireland for a long time, and I would have managed branches where there was lots of cash in branches and stuff like that. So it's inherent to me to understand the cost of circulating cash and coins for businesses, for banks, for the government, for the state.
Okay, and beyond traditional contactless and mobile phone payments, which you mentioned, what future do you think is there for other payment methods like biometrics or voice initiated? And when, if ever, do you think we might see these sort of payment methods becoming commonplace?
Yeah, I think, in many ways we're there on some of them already. It's an evolution for me. Certainly all the three that you called out there, biometrics, voice or gesture are there in other services and are moving into payments. Biometrics is already there in terms of your phone and your digital wallet. Voice is already here with the likes of Alexa, etc., but it's not yet in payments. So, you have to assume the technology exists. And we'll move forward. We'll move forward into payments, as I've said. But what these things of biometrics and voice and gesture will do, it'll absolutely amplify the consumer experience, and people will enjoy doing it, and people will make it easier. Businesses will react positively to it, and like they have during COVID with all the stuff that's happened from it.
And Loretta, maybe if I can ask you, you obviously monitor the economy very closely through the Bank of Ireland Economic Pulse. So can you tell me just how far did the economy fall during the past 12 months and how do we fare now?
Yeah, it's definitely been a very tumultuous year for the economy, not least the COVID shock. It sparked a very huge shock, and it sparked a sudden turnaround in the fortunes of the Irish economy. So we have seen disruption across the board, an upending of business models and altering of consumer behaviour, for example. And despite the fact that the government has provided significant policy supports, the fallout has really been enormous. This isn't necessarily evident when you look at the headline GDP numbers for the Irish economy, and a lot of that is to do with the resilience of our exporting pharmaceutical and ICT sectors, but it's clearly there, and the impact is evident in many domestic sectors when you look at labour market developments in particular, and also what's happened to confidence over the course of the year. So it has been very much a case of things playing out as the virus has played out. So back in the spring, when the country went into full lockdown, we saw a hit to jobs and activity and to confidence. As restrictions started to be eased because the health situation improved over the summer, you saw some improvement on the economic front and a rebound in jobs jobs starting to take hold. That was undone a little bit by the resurgence of the virus going into the autumn, but more recently now, as we've had a sense that restrictions would be eased again over the Christmas period, consumer and business confidence have ticked up a little bit. And indeed, the reference to the vaccine, that's been very important, the breakthrough on that front, and it has raised hopes of economic recovery in 2021, and indeed that's in line with our own views.
Okay, so I suppose we've seen this major contraction in spending and a corresponding increase in savings. So do you think consumption will rebound sharply then in 2021? And what's your overall outlook for the year?
Yeah, what typically happens in economic downturns is that consumer spending does head south and the savings rate heads north. And that happened this time as well. But there have been some unusual aspects to things this time out. Part of the pullback in spending on the part of consumers has been to do with the precautionary aspect. So people have been worried about the economy, they've been worried about jobs and their finances, and that's caused some retraction. But it's also been forced in a way because opportunities to spend have just been curtailed, and particularly if you think about opportunities to spend on travel and social consumption and so on. And that's led households then to accumulate a degree of involuntary savings. So going forward, and we think about 2021, yes, we do expect a rebound in consumption, and that is going to be facilitated by some mending of the labour market, some improvement there, and as some of those anxieties around the virus recede. How much spending firms is going to depend a little bit on what households do with those involuntary savings. So do they run them down? Do they put some money aside and save it for future rainy days? It could well be the case that they release savings more than has been expected and more than factored into projections for the economy. And if that's the case, then we'll see some upside risk in terms of forecast for consumption. For the economy as a whole, we expect it to expand next year. And importantly, I would say we expect consumer spending and investment to make a positive contribution to growth. So it's not just all going to be an export story. We do expect the other parts of the economy to play a role as well.
Okay, and we have seen clearly behavioural changes when it comes to payments over the last 12 months, but also in many areas of work and society, such as, say, home working and the potential that leads to in terms of less office space. But what impact could some of these wider changes have in terms of the economy, do you think?
Yeah, we've seen quite a bit of change, and part of this has been to do with a shift in households' preferences and firms' preferences. And that's been dictated by the fact that consumption and work, they've moved from out of home to in home, and that has led to substitution effects. So, for example, we have people buying their groceries online, spending more on food in supermarkets, whereas before they would have been eating out. We've got online conferencing and video conferencing rather than face-to-face meetings. We've got increased spending on home improvements as opposed to spending on foreign holidays and so on. So there has been a shift in patterns, and that shift and some of those change, it's very much reflecting the fact that we've moved to what we might call a physically distant virtual type society over the past couple of months. We look forward. We think that some of those changes may prove transitory, but we do think that some of them may persist, and the ones that persist then will have more longer lasting impacts on the economy. And if you take, for example, changes in certain areas, it may well be the case that COVID accelerates structural trends that were there, so remote working, online shopping and so on, and that it accelerates those and that they are here now for the time to come. And that's going to bring some opportunities and it's going to bring some challenges, and it'll be a matter of working through those.
And finally, Brian, back to you to close. You run BOI Payment Acceptance that provides payment technology to thousands of businesses across all sectors, the length and breadth of the country. What is your level of optimism for business now looking ahead into the new year?
For me, sitting here, Barry, genuinely, I'm hugely excited about it. I think specifically to payments and our ability to deeper penetrate the market with Bank of Ireland is just huge opportunity there for us. we've talked at length at this discussion in terms of the shift from cash to cards. We're now in the evolutionary stage of that, I feel, and I just see tremendous opportunity. Let's get the state services on board. The car parking, all the space that are constant irritants for me as a consumer and as somebody who runs a payments company in Ireland, and we can make a real difference. Ireland can make a real difference and be kind of a shining light across Europe when it comes to this shift from cash to cards, and having a real evolution, following a revolution in terms of payments. So genuinely, Barry, just working with Bank of Ireland, just hugely excited about what the next stage is going to look like. But next year, notwithstanding the headwinds, or indeed maybe some tailwinds from a Brexit deal, but I think, and we see it in our own data, Barry, a lot of pent-up demand for spend. Every time level 5 goes to level 2, we would have seen a big lift in payments and transactions, and I think we'll see the same again next year, given what Loretta has just said in terms of pent-up savings and people have money, disposable income. It's not like 2008 when I worked in the bank and literally everything fell off a cliff. There was huge debt. A lot of people lost their jobs. That's very, very different now from a capacity perspective in terms of the economy, and hopefully that it remains so. So it's very, very different to 2008 and what went on then. So hugely excited, very positive, and I just see good things in general.
Okay, well, look, Brian, Loretta, thank you very much for your time today. You'll get more information. The COVID Ultra Marketplace report is available to download from our website, www.boipa.com. And thank you very much.